Pulls closed, inflation rates, and divorce tips. Yes, that's what we're going to talk about. Things you need to know and understand when you're going through a separation when it comes to financing and mortgages. All this and more with a good friend, Dion Beg, right after this.
Here we are, my friends, with our favorite mortgage broker in all of the land, Mr. Dion Beg. How you doing, my man?
Hey, Gary, I'm great, man. How are you?
I am excellent. It's October, almost end of October. We started with frost this morning, but wouldn't you know it, we're warming up. And maybe all the news out there and everything else like that is warming up. I don't know. What are you seeing in your world?
Man.
Yeah.
Fingers crossed. Well, I mean, we've all been waiting for this inflation data, prior to the rate announcement this week. And whenever I'm asked for a prediction on interest rates, weeks before an announcement from the Bank of Canada, I'm always very reluctant because, like I say, always, there's stuff that comes just at the finish line, the information that comes just before the decision that will impact that decision. And we were talking about Benjamin Tal, who spoke at the conference, the big mortgage conference last week, and he himself said that if Tiff Macklem was called on stage that day and asked, "What is the Bank of Canada doing on the 25th?" Tiff himself would not have been able to give an answer, right? But I think now, with what happened last week, we were a little bit more certain as to what's likely going to happen this week.
Yeah. This week being, so we're recording this Monday, October 23rd. There's a rate announcement this week. I believe it's the 25th. Am I correct? In 2 days from now?
That's correct.
Yeah.
That's correct.
Yeah.
Yep.
I was just going to say, I mean, you go look at all the different pundits, if you will. They're all, I think, with the inflation numbers that came out last week, everyone's just kind of suggesting, if you will, rates may hold at where they are today. And what's your thoughts on that? Are you kind of feeling the same thing?
Yeah, I've heard enough smart people say that it's highly likely that this week is one where the Bank of Canada has enough evidence that they are able to hold rates yet again. So in addition to their hold in September, that yes, October 25th is highly likely to be yet another hold and pause. So that's some good news. On the flip side, though, it doesn't mean that prices are getting cheaper, right? The inflation rate that came out last week is saying that inflation is slowing, but it still means that prices are increasing. So, one of the big concerns for just the greater economy, the Canadian consumer, is that, at the grocery store, those prices aren't coming down. They are just increasing at a slower pace, right? So, all this leads on to some other comments that Benjamin Tal said that, and by the way, Benjamin Tal is a very respected economist. He works mostly for CIBC, but he speaks at a lot of these major events. And admittedly himself, he said he has been wrong. But I think in this instance, he's making a lot of sense in terms of what he's saying in regards to the impending interest rates. He's saying that, Canadians have been hurt quite significantly. We have people already, as we've discussed earlier, Gary, dipping into lines of credit and credit cards in order to keep their households afloat. And it's true that, again, the Bank of Canada really isn't looking closely at that. They're just looking at that inflation rate number. And in fact, Gary, maybe now would be a good time to just flip to this slide that I have.
Yeah.
And so this slide here is from BNN Bloomberg. The red line shows inflation, and the blue line shows interest rates. Okay, let's jump to where we are today. So interest rates today are at that 5% number. This is the Bank of Canada overnight rate. This is not the retail rate you'll be getting at the branches, at the banks. But yeah, 5% is the Bank of Canada overnight rate. The inflation print that came out last week was at 3.8. So one thing I want you to notice just in the last couple of months here is that we're actually reached a point where, for the first time in a very long time, interest rates are set at a rate higher than inflation. Okay, and if we go back to 2020, and right over here is the start of the pandemic, where we dropped the overnight lending rate all the way down to 0.25%, right? 0.25 is that where that blue line is. Look at that blue line, Gary. It flatlined at 0.25% for a straight two years plus. So this is the period of COVID. This is the period where the Bank of Canada, the government also were worried that Canadians would stop spending, that the wheels would fall off the economy, and so they kept interest rates very low for a very long time. But look at that red line. That's inflation. And so while they were keeping that interest rate super low, inflation ticked up, shot up, and just kept skyrocketing. And look at this. It was only at the start of 2022 when the Bank of Canada said, hang on a second, maybe we should have been watching this red line a little bit closer, and maybe we should jump into action. And I think, and again, I'm not the only one to have said this, when this started to tick up, we certainly should have started to tick up probably early 2022, or sorry, end of 2021, somewhere around here, we should have started to follow. But this gap just kept on growing and growing and growing. And only here did we start to make those changes. And then, as you can see, as we've stepped up, this has slowly stepped down. And we've finally crossed this peak. But guess what? 3.8 is not the target. Do you remember the target, Gary? What we're trying to chase
here?
I
wish I did. No, help me out.
Yeah.
I don't.
So that the Bank of Canada's target rate for inflation is 2%. Okay, which means even though we've done a great job and we've dropped significantly, we are far, far away from where the Bank of Canada wants to be at this 2% number, right? And I don't know if this is kind of pie in the sky stuff. I mean, we're getting closer, but one thing's for certain: inflation, this red line, is a lagging indicator, right? Yeah. So the fact that we are here now means that some changes that happened in interest rates over here are really only being felt now, months and months later. So you've got to ask yourself, the interest rate changes that were made 2 to 3 months ago, we're probably not going to see those effects for another 2 to 3 months. And if left alone, there's a chance that this red line, the inflation rate, might tip its way down by itself. Who's to know, right? But what I can say is I think that all economists and pundits are probably happy to see this crossover of the red and the blue, in that we're actually going in the right direction. And Benjamin Tal himself is saying that the next move for the Bank of Canada is likely down, but it is not for some time, right? So this whole higher for longer is still part of the vocabulary used in every economist conversation. And I think his optimistic view is that by summer, maybe June, July next year, we may be seeing the potential of interest rate reductions.
Yeah, that I'm visual, and I know many of our listeners are as well. Now we can see that ripple effect from the COVID low interest rates, and what's that?
Isn't that crazy?
Like, it is crazy, and of course we wanted to encourage spending during that time. Well, that ripple effect is people also spent on houses, right? And that's it's what's driven us to where we are today, and what's driven the prices and the huge increase of prices over the last couple of years. And now we, visually we can see how inflation affects that if you weren't in the know before. And the interesting thing, you mentioned this is a lagging indicator. On Friday, just before the weekend, I hosted a workshop for our brokerage all about everything a buyer or a realtor needs to know for power sale properties. And it was really interesting because I threw out some questions in the fact that, how many current power sale listings are on the Toronto Real Estate Board right now? And there's 44,000 total listings on the board. So everything. Got it. Right. And I know you're going to be in the know on this and somewhat. And we had numbers, everything from a few hundred to a few thousand to 10,000 in our group that were in attendance. And the point of that was what we read in the papers and all the headlines lends us to believe that there's thousands and thousands of power sale properties, when in fact there was at that moment 175 current listings. Now, mind you, it's kind of tripled over the last 6 months, the current power sale listings. But the point was what we hear and what we know can be different to what the actual fact is. And power sale properties as well is also a lagging indicator of what's going on in the market, because it takes time for them to come to market. And I'll also bring up the point where in markets like this, Dion, not just the real estate market, but our current state of where we are financially in Canada, uh, there's also opportunities and new businesses are formed and generated and so forth. And I know that because I've seen it before, and I'm actually launching a new business right now just based on the circumstances and things like that. So there is, it's not always doom and gloom. Look for the opportunities, right? And I'm not talking about opportunities in real estate all the time. I'm talking about
Sure.
opportunities to to provide a need that perhaps is showing up right now, right?
For sure, for sure. And I mean, and as it comes to real estate, that foreclosure number there, what is it, 175 out of 44,000? Is that the
Yeah,
number?
yeah,
Yeah. Okay.
yeah.
So while it is a drop in the bucket, um, and yeah, the number is sort of overblown in the media. What it does mean is that if those people who are right at the edge, holding on, by their fingernails to their home and have finally slipped and now have to let that bank take it over, it does indicate for me that beyond them there are others, and there are others who haven't yet had to go to foreclosure, but are probably really, really struggling right now. And you know what, Gary, this is the other thing that I wanted to talk with you about today, which is the idea that during these financial times, when families and couples come under pressure, there is unfortunately a big uptick in divorce.
Mm.
Have you noticed this in other market cycles?
Yeah, definitely. It's always a strain on the relationship as well as the outcome of what happens when you have financial hardship, right?
Correct. Yeah. So, I mean, just in the last couple of weeks and the last 4 days, in fact, I've been dealing with several clients who are going through this separation and divorce scenario, and they can draw a straight line to the financial strain in their household, as to why they are where they are. And I thought it was worthwhile for me to do some research on this and figure out, okay, well, what are the numbers around this? And the number I found was that 41% of separations and divorce can draw that straight line to financial stress being the reason for that. So, one thing that I will say to all of you is a lot of you have been sitting out there watching finances get a little bit tougher. And the time to take action on that is not when things blow up, it's well and truly before that. So if you have the opportunity to just sit down with your partner right now and talk about finances openly and freely and raise your concerns and draw some timelines and these types of things, this is probably one of the best things you can do from a financial perspective to I guess ease that strain in your relationship. So that's a big key factor. But while we're on the topic, Gary, we should probably talk about just separation and divorce and the options available to people, if you'd like to.
Yeah, I think it's important. It's an important piece to know because I know it's a part of everyone's lives in a sense where either they go through it themselves or they know of someone that's going through it and perhaps just shedding some light on it. And I know working with people like this in the past, every situation obviously is going to be somewhat different, and definitely if there's children involved, what happens in a sense from a financial standpoint, how does one partner support the other partner? Because in a perfect world every partner makes the same amount of money, but that doesn't always work or doesn't always happen, and there's always typically one partner or a breadwinner in a sense that perhaps makes more. Dion, explain to us the
Yeah.
ramifications of what that looks like. I know there's different options out there from, monthly payments to lump sums or maybe a
Yeah.
combination. And that also has different, a ripple effect on future
Yes.
borrowing, right?
Yeah, it certainly does. So when a couple has decided that it is time for them to part ways, firstly they've got to deal with separation of assets. I mean, obviously they've got to deal with their children and those types of things if that's part of it, and that's certainly a conversation to have more deeply with your lawyers. But from a financial perspective, number one would be the separation of the matrimonial home, if there is in fact a matrimonial home. In most instances, it's split as 50-50 straight down the middle, unless one party can show that in fact they do have a bigger claim to the property because maybe they made a stronger financial contribution. But again, that's a conversation with lawyers. But beyond that, it's a decision with regards to how do we compensate one spouse who may have been dependent on the other spouse because the other spouse is the breadwinner, right? So there's generally three options here. Okay. So one is that there is some kind of ongoing payment from the financially stronger spouse to the financially weaker spouse. So an ongoing payment, monthly payment, which we would call spousal support and child support. Uh, the other option is just a one-time lump sum. So maybe instead of $1,000 a month, it might be, look, here's $100,000. You go off and live your life. I'll continue living my life. And then the third option is maybe a combination of the two. Right? Have you seen that in your experience with dealing with people who've gone through separation, Gary?
Yeah, in fact, the one that I can recall of most recently, there was a lump sum payment. In fact, in this one, yeah.
Right, right. Yeah, and when it comes to making a decision around that, I generally, unfortunately, I end up meeting clients after that decision has been made, right? They deal with their lawyer. The lawyer sits down, the lawyer does everything that is probably well within the rights and seemingly to the benefit of their client. That thing is settled, and then they come and see me and they say, hey, Dion, I'm now separated. Here's what I've got to work with. And I wish in many instances that I was actually involved a lot earlier. And the reason I say this is it's not a one size fits all for those three choices, lump sum, ongoing payment, or combo. For some people, the lump sum is the right choice. For some people, the ongoing payment is the right choice. But here's a simple one. And in many cases, that ongoing payment really does diminish your ability to move on and buy more property. And I'll give you a quick example, Gary. So let's just say you have an ongoing payment to your spouse of $1,000 a month, okay? Or you could have given your spouse a one-time lump sum of $100,000, okay? So when you look at those two things, most people would go with the monthly because it seems a little less ominous than a one-time $100,000 payout. Okay, and I get that. The challenge there is that $1,000 per month payment that's out the door every month reduces your borrowing capacity by close to $200,000. Right.
Wow.
So in this example here, this person would have likely been better off paying the $100,000 lump sum and not having to pay the $1,000 payment, and therefore being able to buy the property that they want. So in many instances, that monthly ongoing payment has hurt. On the flip side, though, if you give away that $100,000 and then it leaves you with nothing for down payment, then you have a different problem, right? So this is where I say it's not a one size fits all. It depends on your liquidity, your capital, and your earning capacity. So my strong advice to anybody who's going through this process is please involve your mortgage advisor early in the process. And it should be a collaboration between your mortgage professional and your lawyer or legal aid or mediator, whomever you're speaking with, so that things aren't agreed to before you understand the financial consequences of those, because you might be cutting off opportunity for yourself if you don't do that early.
Yeah, that's good insight, because we always think of, how can we get through this as easy as possible, right? For the most part, I think most people do, without
Yeah.
thinking about, okay, what does this mean in 5 years from now or in 10 years from now? They're just thinking about today, right? It's kind of like when we go look at to buy cars, we look at that monthly payment. Oh, I can handle that monthly payment, but we kind of forget about, well, the cost of the car is, or the
Yeah.
lease payout is, that's good insight. Is there anything perhaps other than, what am I trying to ask? Is there something that shows up that people should avoid at all costs during situations like this?
Again, there's no blanket answer to that. But one thing I will say is I have come across clients who, in order to get things cleanly done as quickly as possible, they've given up way more than they otherwise should have, right?
Mm.
They've been overly generous to their spouse and acting out of the good nature of themselves, just for, because maybe the children are going to live with that spouse. They're like, okay, you guys take everything. But in doing so, they diminish their ability to then go off and live their own life, which unfortunately, and I've seen it, it then impacts their relationship with their family, because now they're living in a 1-bedroom apartment and they can't have their children visit them, right?
Right.
So the one thing is, as much as you might want to just be overly generous, please don't do that, because it might hurt you in ways that you're not really even can see right now.
Yeah. Yeah. It's interesting. It's always good to have, you know, good advice and good advisors, a good support team around you, and that goes for anything in life, and then definitely from when we look at buying properties, it's always good to have the right people on your team. If you're on the investment side, is this, you know, someone to review your numbers, someone to look at that mortgage and have that insight? Is that the right area? All those types of things, and that shouldn't change for anything. There's also an interesting phenomenon around the whole divorce and family and kids, so forth, where the children remain in one house,
Yeah.
and the partners will exchange coming to live with them in that house, right? Is that you're starting to hear more and more about that?
Yeah, I think it's called nesting. I could be wrong, but it's the idea that historically, what would happen is, mom would live in one house and dad would live in another house, and the children would move back and forth between the houses after a separation or divorce. But this new concept is, yes, the children stay in the one house, and then the mother and the father, they move out between care for the child. And I guess from just an outsider's perspective, it probably does give more stability to the children, knowing that they're not having to pack up and move every weekend, or shuttle across town or whatever, and it won't impact schooling and all those other routines that we all know are probably important. So yeah, it's an interesting approach that I have seen actually discussed and work for some of my clients. Yeah.
Yeah, yeah. Interesting stuff. Interesting stuff. So, my friends, lots of good insight here. And heaven forbid, should you ever go through a separation or a divorce, or you know someone that is, as Dion mentioned, it's important to have good advisors around you that are looking out for your best interest and in the interest of your family as well. That's good stuff, Dion. And of course, we got our interest rate announcement coming in the next couple of days, and I'm sure we'll be talking about that next on the next video. Dion, remind us how to get a hold of you.
Yeah, so kangamortgage.ca or on Instagram at the Dion Beg.
There you have it, my friends. So for Mr. Dion Beg, I'm Gary McGowan. We'll see everybody in the next video. Goodbye for now.
Thanks, Gary.